question. Tony.
Yes.
My house, can I put it on the TrustMe open market?
We're close to that, to be fair. So right now we're working with the FCA. London is the first one to go, the first exchange to go. There are quite a few rules because we need to make sure ultimately in this, and for all the right reasons, we need to protect the consumer. So someone buying your certificate, they want to make sure that they've actually got it, that they can trade it, and it retains its value, and we don't have any suspicious activities happening around the sale. So for us, we have to create a new exchange mechanism, and that follows many of the rules of the existing, for example, London Stock Exchange. We have data analytics running in the background. We have very, very strong security on the whole process. Anybody coming onto that exchange, which protects everybody on it, has to do what's called anti-money laundering, AML, and there's also some requirements called KYC, know your client, so we can understand where the money's coming from and that it's actually coming from bona fide sources. So we ultimately offer an opportunity for the exchange to clean up, arguably, some of the less comfortable ends of the Bitcoin market. And that's good, because that's where we want to be. Because if you're going to trust your house, which is your primary asset, you want to make sure it's somewhere safe. And if you're going to sell it somewhere, you want to make sure you get paid for it, obviously. And that's what we're trying to do through the exchanges. Because
it makes the whole remortgaging to release liquidity for yourself great. However, it does sort of cut the banks down a little bit.
Yes,
really.
we're going to have some fun with this, undoubtedly. Part of what's actually happening here is you're absolutely right. We're going to be destabilizing for the existing mortgage providers. Because in this democratization of property process that we're talking about, is it means instead of going to the few, the mortgage provider, the bank, the few people who do the equity release, we're actually going to a global audience now. We're not going to the few, we're going to the many. And that means all of a sudden you don't have to pay those fees, those commissions, those costs associated with taking your property through the traditional process. For a lot of, it does mean that these guys are going to have to compete for the first time. And we're having some quite good fun on the modeling, because it actually says that if you are a property investor and you want to invest in property, it makes a lot of sense once you've collected a bit of a portfolio, and let's say you've got 200 property certificates in there and it's worth whatever it is on the current exchange. And these are all live products, so you know the value of them every day, not just once a month or once a year. You know the value all the time. And this offsets some of the problems that happened in 2008. It's a much cleaner way for property to sit as collateral in other people's books, balance sheets, portfolios. But to get to the point, you're actually in a situation now where if you collect, let's say, those 200 properties, you could offer them back to the mortgage companies. Instead of you paying interest to the companies for your mortgage product, they're going to pay you now. So you've turned the whole process upside down. It means they're your portfolio properties, which they need on their balance sheets, and it's very likely they'll come to you and ask you if they can borrow them for a fee and put them on their own books so that they can continue their traditional lending practices.
I like it.
So it's power to the people on this one.
Yeah.
And it certainly puts us in control of our identity on the blockchain, our property on the blockchain. And for the younger generation, the one thing we're very proud to talk about is it actually gives them hope to become property owners.
Absolutely.
Which is, as we know in the UK at the moment, is a bit of a challenge because of the steeply rising property prices. In this model, assuming only one thing, is that the value of your property that you choose to live in is respected and needed and wanted by outside investors. You can cut out all the middlemen, and in theory, we're ending up in a model where you could buy your house for 51% of its previous asking price and not have to pay any mortgage on the balance, 49%.
Wow, I like
because
that.
The 49ers, as we're calling them, are investing in it as an asset class.
Yeah.
Which we already know they're doing in London. There's 20,000 properties plus in London that are empty at the moment that are just invested as an asset class. That's ridiculous.
Yeah, it's huge amounts of property funds around that doing that.
So in a sharing economy sort of guys, you can invest in the asset class, you don't have to leave the property empty anymore. And we think that's a great boon for the younger generation who are trying to get on the property ladder.
I like it.
I do
Would
too.
you do that?
Yep, we're looking for jobs, so it sounds good. Yeah. We'll give you a call.
If you need a couple of people to help you with that.
You'd be welcome, guys. Got to bring your properties up.
That's a given.
Be me in a Happy Meal box.
Tony, talking about